Thank you, Mark, and a big hello from London. This past week has been the polar opposite of the recent slowing down in weekly technical patterns. It is fair to say that last week was the busiest I have ever seen in weekly technical patterns in recent years. Added to this, we also had the monthly technical patterns for the month of February to contend with. So it was overall a very busy time. The key feature, in fact, was the overwhelming feature, in fact, was last week's weekly key reversals up in the US dollar versus other currencies. Thus, we had weekly key reversals up, and these are in no particular order. Weekly key reversals up in the US dollar index, US dollar South African rand, if only just on this one, US dollar versus the Chinese yuan, the onshore, the offshore, and the 1-year NDF, US dollar Malaysian ringgit, US dollar Swedish krona, US dollar Danish krona, US dollar Thai baht, US dollar Chilean peso, US dollar Polish zloty, US dollar Romanian lei, US dollar Hungarian forint, US dollar Taiwanese dollar, US dollar Korean won, US dollar Singapore dollar, US dollar Bulgarian lev, and US dollar Macedonian dinar. Going the same, US dollar positive, we had weekly key reversals down in euro against the US dollar and sterling against the US dollar. And also like to include a weekly key reversal down in spot gold here as well. This week, we have seen none of them, absolutely none of them so far, show any follow-on US dollar positive moves, and many who have shown the exact reactionary opposite moves. In fact, it is worthwhile just mentioning here the FX pairs that did not make weekly key reversals last week. Notably, US dollar Swiss, and especially notable, there was no weekly key reversal last week in US dollar Japanese yen. Okay, so we also saw some weekly key reversals last week in the FX crosses, with weekly key reversals down in euro against the Romanian lei and euro against Hungarian forint, and weekly key reversals up in euro against the Polish zloty and the Swiss franc against the Polish zloty. In these four, the only one that has shown the slightest inclination of follow-on has been the euro against the Hungarian forint, and then, well, not by much. Looking now at international stock markets, and we saw a weekly key reversal last week, at the top of the market. In the UK FTSE stock index futures, and in this case, the market has seen an attempt at least at making a follow-on higher this week, though the market here has yesterday and today pulled back to within last week's range. Additionally, we saw a weekly key reversal down last week in the Chinese CSI 300 stock index, which this week has seen an attempt at a follow-on lower, though, like the FTSE, has pulled back to within last week's range. On to commodities, and last week we saw a weekly key reversal down in both the New York sugar futures and in London sugar futures. Both of these have seen good follow-on moves lower this week to these weekly patterns, though they have run into some support right now, which has tempered the moves lower. I cover both of these in my weekly sugar video commentary that came out this past Monday. Now perhaps the most radical and contentious resultant move this week to a weekly key reversal made last week. It was the weekly key reversal up, if only just, that we saw in CME Cobalt futures last week. Then over the weekend, and I grant you this may be caused by changeover, but prices on the front month on my daily chart rose by over 11%. This may be one worth watching, as we have since seen a large, if slightly less impressive decline, though still above February's levels. Last week also saw a weekly key reversal up in EEX butter futures, which has interestingly seemed to stabilize at these higher levels this week. Additionally, we had a weekly key reversal down last week in the SGX SICOM TSR20 rubber futures. However, this week, the market can't seem to make up its mind whether to follow on lower or stage a reactionary move back up. Needless to say, we are still well within last week's range there today. Finally, I grant you that this is on my daily continuous charts and may also suffer from changeover, but we had a weekly key reversal down last week in Chicago live cattle futures. This week has seen the market trying to fill in the resultant gap on my daily continuous charts. Okay, so that concludes the many weekly technical patterns from last week. Let's now look at the monthly technical patterns made in February, and I'll start with Paris milling wheat futures, where we had a monthly key reversal down that has seen an immediate follow-on lower in March, and the achievement of the primary target X at 226 for the move down below the large August last year to late February this year ascending wedge pattern. I cover this more fully in my weekly grains and starches technical analysis commentary, which was out last Friday. Next is the monthly key reversal down we saw in the NASDAQ 100 index in February. This has already seen this week a follow-on lower, but is having now to deal with the rising long moving average that is below, currently at 20238, and a little lower down the interesting 50% Fibonacci line of the August 2024 to date move at 19829. Finally, a related pair, as we saw monthly key reversals down in both the ICE Dutch TTF gas baseload futures, as well as in the ICE UK NBP natural gas futures. Prices this week have edged lower compared to last Friday's, but the market has not managed to push down below last week's range as yet. As always, I'm happy to answer any direct questions of anyone who is interested, and with that I'll finish this section from London, and I hope that you found these comments useful.
Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Service International Limited. And here comes the final important bit.